Hey folks, great to be here as part of the NewStatesman Fintech Summit. My name is David Brear, and for today's panel, we're going to be delving into the power of partnerships in the financial services sector. It's been a really interesting topic, I think probably over the last 5+ years, actually, in terms of the real evolution of the fintech sphere and the evolution of actually how big incumbent financial services players are really seeing it. We've got some great guests here to talk about this topic. First up, we have Alison Harwood, who is the head of London branch for Varengold Bank. Say hello, Alison.
Hi.
We have Rhonit Ghose, who is the global head of banks research and co-head of the Fintech theme group at Citi. Say hello, Rhonit.
Hi.
And we have Germain Bahri, who is a digital banking consultant at Fidor. Say hello, Germain.
Hello, everyone.
Lovely to have you guys on. So, I mean, kicking this off, I mean, a relatively new partnership over at Varengold Bank, Alison. Do you want to tell us a little bit about what you are doing with the folks over at Capilendo?
Yes. So that's been a huge focus for us for 2020, and a really important partnership for both Varengold and for Capilendo. And that was a partnership earlier in the year, where obviously in the light of COVID-19, a lot of government schemes opening up to provide financial support to small and medium-sized enterprises. Here in the UK, fintech and alternative lenders were allowed direct access to those schemes by the British Business Bank, but it wasn't the same in Germany, where the KfW requires a house bank to be a part of that scheme. So for us and our business, we're always partnering with fintech lenders to either help them grow their product offering or grow loan portfolios. And this was an ideal opportunity for us to partner with Capilendo to allow them access to the KfW's coronavirus scheme and provide much needed liquidity to the Mittelstand in Germany. And that was allowing access to the first digital only applications process to that scheme.
Well, it's interesting, isn't it? I mean, in that particular jurisdiction, as you say, then it is part of the process to almost force these types of partnerships, isn't it? To allow people to access to market for lending in that space. But I mean, I guess more broadly, I mean, Alison, like, why do you think these types of partnerships are important? Because I mean, this hasn't always been the way, has it? It hasn't always been the need really for these big organizations such as yourself who are, you know, acquiring customers to partner with other people to get them into the market.
Yeah, well, from a Varengold perspective, we appreciate that we're a relatively small bank, and we would like to be doing diversified credit business across Europe. So that there are two routes that we could do that. Either we could go out and we could build a team across Europe and do that directly, or what we think is the better approach is to support what we see as a really innovative industry with the fintech lenders and partner with them where they are specialized in their jurisdictions to get the credit scoring right, to get the origination channels right. And then we can have a really diversified book, and we can support the fintech industry by partnering to help grow lending portfolios across Europe.
Well, I mean, I mean, you guys are bringing something to this, they're bringing something to us. I think as a theme, we'll kind of come back to that in a second, because I think that seems to be at the heart of many of the partnerships that are really being sort of successful at this stage. But I mean, Rhonit, to sort of bring you into this, and I guess from Citi or a huge banking organization globally. I know obviously your role, Rhonit, you look at the market as much as you look at what Citi are doing particularly. But I mean, this has been a trend that you've been covering for a really long period of time. But why is there a need for these types of partnerships, do you think, particularly for the big incumbent organizations?
Sure. I think in the B2C space, the last 10 years of really going to a whole new kind of client interface model, kind of mobile led in the West and mobile only in the East, that jump from a branch-based, batch processing-based 1970s, 1980s business model to a kind of 2010, that's a huge jump. So many banks have tried to do it themselves. I mean, David, you know, at 11FS, you guys have advised many of these companies in the UK, in Asia, in the rest of the world that have tried to build their own kind of challenger bank or challenger brand. It's super hard to do that. I'm struggling to think of many established incumbent banks that have really set up you'd say a digital or a challenger organization. The nearest you could get is probably ING Direct. That's a really old company now, ING Direct in a way, but for me, ING is a successful example, but many others have struggled. I mean, we have examples in the UK where you've got incumbent banks trying to build stuff in-house, you know, been shuttered, same in the US. So I think part of what's going on is a lot of clever people inside these incumbent, call them heritage banks or legacy banks. But the problem is they can't move fast enough. So in a way, by doing partnership, you're outsourcing innovation. You're saying, I'll invest in you or I'll partner with you and you'll bring me up to speed. And that's very much in the B2C space. You've seen the likes of ING, BBVA, American banks invest in small startups, small fintechs. There's also the whole B2B angle, which is we're going to partner with someone and you'll help us improve our processes. So be it risk, be it compliance, be it reg tech, there's huge amounts of money that's thrown at things like regulation and compliance that's core to a bank. And those are done in very analog, non-digital ways. If you can find the right partner, then you can improve substantially the economic value, your bottom line, your share price, versus just throwing bodies at this. And you could call them vendors, and maybe we can talk about this in the rest of the conversation. You can call them vendors, but in many ways, they're much more important than vendors. They're sort of strategic. Though sometimes that partnership angle does get a little bit of a PR whitewashing.
Yeah, and it is interesting to see that, isn't it? I mean, I've had people call 11FS a partner, and then I think in the procurement process I have to sign away both my children, and I'm like, this doesn't sound like a partnership, guys. Like we probably need to talk about how this, you know, the 50-50 of this partnership sort of works in the setup. So I mean,
Yeah.
to your point, Rhonit, like, I mean, is this a
no, you're the kids, right? That's the bank. Bank procurement process is basically adult children, you know.
It does feel like that sometimes, I have to say, but it is an interesting point because, well, I mean, is this just marketing for what used to be called vendors, or, you know, is it really something deeper than that? Because I mean, when you look at the organizations, and I you know, run it to your point, the companies that I've worked with in the last 4 years that feel like it's different are the ones who are almost admitting that there's a deficiency. They're admitting that they don't know about everything in the world, and therefore are really trying to change, and they're bringing in people to help them with that transition. Because I guess banking is not in a steady state right now, is it? You know, banking used to be quite straightforward. The, you know, tweaking of knobs with the products and setup was like relatively straightforward, relatively understood. But we're in a period where we're going from that sort of digitized manifestation of financial services into really a digital world. And actually what the partnerships thing feels like is people who are kind of chaperoning people into that world. But I mean, Germain, what do you think on this? Because I mean, obviously from Fidor's perspective, you've been both sides of this, right? You guys have built your own banks and led you know, creation of banks. You've been there and done that and created those successful organizations, but equally you work with big incumbent organizations to try and move them into this digital world. So how do you guys see that partnership relationship working?
Yeah, exactly, David. As you mentioned, so two business models. I actually worked on both sides, actually, for the bank and also for the banking as a service part. So I can see the two different perspectives. I think a few things, as you mentioned. I think it is true that we've seen in the market a lot of maybe called innovation theater, where banks have, you know, been announcing partnerships with fintech or developed some innovation programs with fintechs, and we haven't seen a lot of follow through on that. But in the case of Fidor, that's these partnerships have really represented the core of our offering. You know, I mean, if you look at what we have developed in house, really, it's really just current account and a few modules, a few features that have really manifested itself in our both in our technology stack, which we offer today as part of our B2B business, but also directly impacting our customer experience.
So I guess on that as a topic, really, I mean, Rhonit, you sort of touched on this, and Alison, you touched on it, and Germain, you touched on this as well, actually. I mean, how much of this is technological partnerships? Because very often, or even regulatory partnerships. I mean, Alison, you touched on this at the top, that there's a requirement for almost a chaperone to market in some geographies for these things. But so much of that then boils down to an ulterior, not an ulterior motive in a negative way, but an ulterior sort of benefit or an auxiliary benefit for those organizations into these partnerships, right? So, I mean, Alison, in your particular example, you know, you are working together because, you know, 1 + 1 = 5 in this scenario, in terms of being able to open up a market, doesn't it?
Yeah. And we work with quite a lot of clients on that basis as well, either allowing them to access a new market such as Germany or France without the regulatory overheads of having to put in place their own full operations team to support the regulatory requirements. So it's a really powerful partnership from that perspective for clients. But at the same time, from a bank perspective, if you're taking that regulatory overhead, then that can't be a light touch arrangement with whoever you're working with, because that's a really serious undertaking, and banks are highly regulated and for good reason, and you need to make sure that is really I don't want to say a partnership of equals, but a partnership where both party is bringing equal benefits to the other. Really powerful, but they do take a lot of work to get right and to make sure that everyone understands what their obligations are and is really fulfilling them on an ongoing basis, which is the other angle to it, that it's not a one-time onboarding, it's a partnership that has to have a continued close relationship over time.
Well, and as you say, the benefit of these types of partnerships as well isn't just the organizations who are partnering, but actually the regulator has somebody to point to that they know has gone through the process, that they know, to your point, Alison, is the back office to really manage this type of change and manage the distribution of funds in a way that actually adheres to the regulations. But I mean, Rhonit, what about in the more incumbent side of the organizations then? Because I mean, how much of this is banks have been used to procuring technology, but how much of this is procuring a different way? You know, how much of this is cultural as much as technological?
Sure. I mean, banks have been procuring technology, I mean, since the 1960s and 70s, right? If you sort of go through the corporate histories of these IT vendors, many of them date back to the sort of 50s and 60s. It started with government, you know, NASA, big government, and then the banks followed. So what's different this time is you're not just buying like mainframes or hardware. You're doing some kind of combo of, I'm buying the technology, I'm buying the consulting, but I'm also buying sort of almost strategic level consulting. So when you go to a Google or an Alphabet, it's not just you're using their cloud, they're trying to do something more for you. So there's clearly an element of PR whitewashing going on by many banks. They're trying to attach their name to the big tech companies that are in the zeitgeist, that are in up to recently the sweet spot. But it's more than just a vendor relationship. In many cases, it's about product acceleration. It's about, I want to, set up a new digital bank, say in Hong Kong. I'm going to start with a completely new tech stack. So I'm going to have, you can call them vendors, you can call them partners, but the difference is that I'm not going to use my existing IT vendor. I'm going to try something different. And then there'll be multiple, again, partners and vendors in that when I set up a new bank, if it's in Hong Kong, or like an American bank doing it in London, can't think of who I'm thinking about, but all of those kind of situations, those you're trying to do something different. It's a new business model or a new product. And what you're trying to solve for is that the existing organization can't deliver that in that speed to market.
Yeah. I mean, I don't want to I don't want to
Yeah.
get too deep into the relationship partnership metaphor here, because it sounds like I'm talking about more personal relationships. But actually, the interesting thing with those examples that you're talking about, so you know, the big US bank moving to the UK, and actually look with what we've
UK
done
Bank,
with somebody
Hong
like
Kong,
Standard Chartered in Hong Kong, right?
yeah.
It is the relationship that people are trying to get away from is very telling, the approach that they sort of take to these things, isn't it? So you know, we're in the example of, you know, like JP Morgan Chase's, you know, London piece. Well, actually they tried it in the US and it didn't work very well. Therefore, what was it that didn't work? Was it the cultural piece? Was it the technological piece? And actually, you know, what are they really trying to solve for? Because
All of the
your point
above, right?
earlier on,
It's
sorry,
all of
say
the
again.
above. They're trying to solve for all of the above.
Exactly. And well, and
when
that's
you
the
look at
hard thing, isn't it?
Yeah, yeah. Because in the
But
US, what you have is it's a classic. It's not a bank issue. It's an existing company organization issue. When you've got a very large existing company, and you've got a very large existing profit pool, it's the whole classic innovator's dilemma. Do I cannibalize myself or do I wait to get cannibalized? And so when you have a big company, so that like the US bank in the US, you try not to cannibalize yourself. So you don't do something dramatically different. You kind of extend your existing technology. You don't start with a completely new vendor or a completely new partner. You don't give them freedom. You kind of constrain their strategic freedom. Whereas if you start with a blank piece of paper, so you start something in London or you do a digital bank in Hong Kong or Singapore, you have much more optionality. You can try lots of new things. So it is more than just tech.
And so I mean, so people are procuring something different, but the thing that they're procuring is the future of their organization at that point, right? This feels, and I think that gets to the heart of, I mean, I feel like we're on some sort of relationship. I feel like Jeremy Kyle right now. I'm trying to like figure out what's wrong. What was wrong with the existing relationships between the vendors and the incumbents? Because I mean, what goes wrong in relationships? I mean, let's all talk from personal perspectives. It's like any relationship I've ever had that goes really wrong is like communication, right? Like if you stop talking to one another, or one person stops pushing back when they think something's wrong, then that's ultimately where relationships go bad, right? And actually, has that been what's been wrong in that sort of vendor procurement incumbent relationship, which is the procured vendors are just doing what they're being told to do, rather than pushing back and defining what should be being done. And actually, if you're bringing experts into your organization, you've kind of got to listen to them, right? Else you're just spending money and not going to achieve anything. I mean, Germain, there must be many times Fidor go in and go, look, this is wrong. Like we need to, if you really believe in transforming your organization, we kind of need to do it in this way, right?
Yeah. No, I think as you mentioned, David. Well, traditionally, I think most of the banks that we work with had very few partners. They tend to really develop most of the things in house. And if they had partners, they had the traditional either core banking system or very old legacy systems, which what's good enough until now, but really could not enable them to actually keep up the pace of innovation and match the product offering that you have today in these challenger banks. So I think that has pushed them to start considering really going beyond these vendors. And I think also they were really in a sort of vendor locked-in kind of position as well, which made them quite hard to actually move out of these partnerships. So I think that's part of the issues they had with existing partners. And what fintechs are able to provide actually this very easy plug and play integration, and also along that way that sort of as Ron mentioned, that consultancy part of it, of bringing the perspective of beyond just the technology approach, the integration with additional partners, but also the user experience part of it. And I think that's something we try to bring as well when speaking to clients, beyond just the technical piece of it, but really advising them on how to best run that piece of technology, and also really leveraging the experience we have running our own bank. So we've experienced that. We really see Fidor Bank as also sort of a laboratory for us to test some of these partners and actually share these insights with our clients. So I think that's where the new added value comes in discussion with our clients.
I think it's so interesting because you know, as we're all sort of collectively saying, it's like they're starting with an objective, which is to solve a very specific problem. But the auxiliary benefit is to make their organization fighting fit for the digital age that we're essentially hurtling towards. So, I mean, Rhonit, you sort of touched a little bit on cloud services. I mean, it seems in the last 6 months or so, every bank has sort of announced a cloud partnership in some sense. I mean, how is this not just replacing your data centers? It is a partnership that they're sort of portraying in that sense that it's revolutionizing not just, you know, where your data is stored, but fundamentally their ways of working.
Sure. I mean, the cynical side of me would say this is a little bit like AI was 2 years ago, or blockchain was 4 years ago. I think it was 4 years ago, right, David?
Yeah, about 4 years, yeah.
Everyone was like, every bank CEO was being asked, what's your blockchain strategy? Because that's when Bitcoin was about to hit $20,000, right? So every bank CEO needed to have a Bitcoin view, and their PR teams had told them, say Bitcoin is ... but blockchain is, you know. And then we moved on to AI, and it feels like this year's version is cloud. And it's all in the right direction, but there is an element here where we're really trying to paint the future, because today, very little of the core of a big bank gets done on the cloud. If you're a neobank startup, if you're like, you know, one of the, you know, London-based neobanks, sure, you are cloud native or primarily cloud-based from the start. If you're building in Hong Kong today as a virtual bank, you're cloud-based. Most of the big banks are talking aspirationally, and because it's like a big change, in many countries, the regulator still is not 100% comfortable with the idea of putting core functionality in the cloud. So there is a little bit of a kind of cloud washing going on. You know, you put out an announcement with Google or Azure or whoever, and then you get a headline. You get a headline in the newspapers. So it's not, I mean, it's heading in the right direction. I'd love to hear what the other panelists think, but I think today it feels a little bit like more of a PR release. It's more of a signal. This is where we want to go, and these guys are going to help us.
Well, we've had a year of, you know, virtue signaling on various different guises, but we've also had one of like, I get technology signaling from sort of big banks to a certain degree. But I mean, Alison, what do you think on this one? Is this an indication that people are thinking about the right thing when announcements like this happen? Or do you think it's really just, you know, a PR exercise?
I think it's probably somewhere halfway between the two, really. And I think it goes to showing the power of partnerships at the moment, that there is that sort of PR angle that the incumbents are looking to gain, and they want to. It's not really a press release item to say we've got a new vendor relationship, versus we're partnering with Google to help empower our move towards cloud-based. That's a really different messaging, and I think that's really telling of the view about partnerships between banks and tech companies at the moment. It's seen as something positive, and gives the customer base of that bank and its investor base a view of, we're moving forward, we recognize that digital is the way forward, and this is how we're moving towards that direction.
I mean, does it paint, do you think, I mean, Rhonit, I know me and you've talked about this before, but do you think this paints really an indication of a bit of a dynamic shift in the industry, that actually the big fintechs, and actually not just the fintechs, but, you know, every bank on the planet is reasonably terrified Google's going to start a bank, right? So is it a shift here? Are we calling some of these things partnerships because it's better the devil you know and that you work with, in the sense that actually if I get really close to these organizations, then maybe they won't destroy my organization in 5 years time? You know, like, is it a power dynamic shift, do you think?
It's definitely, I mean, in terms of economic power, stock market currency, but also sort of cultural power, I mean, that shift's happened, right? I mean, 10 years ago, the big banks were bigger in terms of economic power, and maybe 20 years ago, cultural power. But in the last 10, 20 years, it's completely changed. I mean, these big tech companies are dimensionally bigger than most banks, particularly banks in the UK and Europe. The tech companies are, gosh, they're like between a 50 and 100 times bigger in terms of their equity value. So the scale is completely different. In terms of like keeping your enemy close, many of the big global tech companies of US origin are treading very carefully in financial services because it's hyper regulated, and regulation's coming anyway because of the changing political atmosphere in the US and Europe. And they don't want to go too far in terms of being producers, basically balance sheet owners of financial services. What most of them want to be is distributors, right? They want to embed financial services at point of sale or in the messaging or as a sticky element in the ecosystem. And if they can get a bank, whether from US, Europe, or Japan, as the kind of pipe in the back, or like the plug and play in the back, that kind of works for them. So Google has publicly announced, I think it's about 8 or 10 banks are going to partner with them, rather than sort of, in China, what you've had is a model of basically some of the big tech companies wanting to own production as well as distribution. Whereas I think the US companies will still try to keep distribution, which is the higher value added part of the pie, and let the banks do the production, almost like make the banks the kind of the back office, if you like. For some banks, this is actually a really good strategy. For some banks, partnering with, if you can become like the preferred provider or preferred partner for a Google, that's a great outcome. In a market like India, the Google ecosystem is so dominant. I mean, half of basically online payments today is done through Google Pay. So if you're like their preferred partner, that's not bad. Now you are worried because they're controlling the client interface. It's a bit like an insurance, like between manufacturing and distribution. Until recently, retail banking was all bundled, and now it's been unbundled, and that is going to scare some people. It's a hyper digitized version of what's happened, say, in mortgages in the UK. I don't know about you, David. I mean, I haven't been to a bank to get a mortgage in the UK since I took my first mortgage out from Halifax. Every subsequent mortgage was through a mortgage broker. So I have no relationship with the bank. The bank is a pure product provider. But the bank in the UK makes money and makes good money from UK mortgages. So it's not like a really scary outcome to, if in that case, the bank's partnering with a mortgage broker. Here you're partnering with Google. The difference is Google's obviously way more powerful than any mortgage broker. So it makes people rethink their business model. But for some institutions, it could actually be it could be like a win-win. Google wins and you win. For other institutions, yeah, are really scared.
I think that's a really interesting approach, isn't it? And actually, I mean, the knock-on effect of that and those types of, gigantic players with other gigantic players, like you're great at distribution, we're great at manufacturing. I mean, it does force, and I guess the negative potential of that would be, I mean, we've seen this play out potentially in the mobile network operator industry, haven't we? We've seen, I don't really care what is the logo in the top right. Actually, I just care that I've got an iPhone. And actually, the way that could impact the industry, because I mean, when I was at Lloyd's Banking Group, really the whole strategy was about 2.3 products. We had to have 2.3 products to be in a situation where we gained efficiencies of our scale to make sure that actually the whole business model of the organization really sort of worked effectively. If you're not able to do cross-sell and upsell really effectively because you're not owning that front-end experience and you're relying on another partners, I honestly think that has such a big knock-on effect of your independent product pricing to make sure that every product is cost effective. But I do think it comes back to your point earlier on, is like, if that power dynamic is already gone, then, and actually that change has already happened, and it has, right? Apple, Google, Amazon. I mean, I'll buy anything through Amazon just because I know the experience is better end to end, even though if I know it's slightly more expensive, I know my end to end experience is going to be better. So, I mean, it is interesting. But your point earlier on, Rhonit, about the B2B space, I mean, what is it that has changed particularly in that then? Because, I mean, we'll come to you in a minute, Germain, on this one, but the fact that Fidor had a bank and they could prove that it was we've done this, it works, it's working. Do you think, Rhonit, that is what's changing that B2B piece? People are buying outcomes, not just technologies at that stage.
Yeah, so I think there'd be 2 points I'd make. One is from a bank's perspective with their clients. The B2C space is obviously where the disruption's been great. And I don't know where you put SMEs, are they C or B? But where the banks have really got a relatively protected moat is in the business, sort of middle market, but really large corporate, capital markets, cross-border. None of there's like no transfer-wise of cross-border payments. I mean, JP and Citi move trillions of dollars a day. That's not being threatened by anyone right now. I mean, we could talk about blockchain later, but no one's threatening that right now. It's really the B2C space where, and so the bank goes to maybe a B2B provider for them or a partner to say, I've got a problem in the B2C space. So like TransferWise, many banks in Europe have partnered with TransferWise and said, I'm not going to try to do cross-border, low-cost retail, FX, you do it for me. So those kind of partnerships, in a way, the B2B partnerships of the fintech is to solve their B2C problem, which is that usually banks, massive generalization, but most banks can't innovate, roll out new products fast enough in the same kind of half-life as a fintech can do. So you're getting a B2B external partner to solve your B2C front-end problem.
I mean, we love a good massive generalization. Don't worry, it's absolutely fine, Ronnie. I won't hold you accountable to it. But I think it's interesting though, isn't it? Because anywhere where you get specialists versus generalists, if you can get a group of specialists together, you're going to get a better outcome than just letting the generalists kind of go with it. And I go back to my M&O piece, or even Intel. Intel inside is a real benefit to the credibility of the product, isn't it? You don't get large technology companies spending all of that effort and that money on silicon chips because somebody's doing it really, really well. And maybe that's what we're pointing at here more broadly with these partnerships is it's moved from that general vendor relationship to this partner relationship because actually everybody's doing a slice of business within financial services more effectively now. And actually, to your point around the disaggregation, this rebundling periods that we're in right now, it's the people who can pull together the bundles who are going to be most effective. Look, we've seen this in car manufacturing for a long time, right? Not everybody is creating their own batteries and lighting and, stalks for changing gears, but it's the people who can pull those things together in the most compelling package for the customer that actually creates the service that people really crave. What do you think is leading between the partnerships that are being successful and those that are not? Because I think, Rhonit, you talked about it earlier on, there's the sort of the motorway is littered with partnerships that hasn't worked out very well for one reason or another. Not quite as elaborate as me saying they're trying to take my kids from me if the partnership goes wrong, but definitely there's many that have not worked out that well. So what do we think is the balance point here in terms of things that are really working effectively?
Oh, that's a really difficult question. Even the best in class, if you let's just focus this regionally to the UK and Europe, even the best in class banks have really struggled to demonstrate the ROI benefits so far of many of these partnerships. Probably the weakest example of partnerships has been where a big bank goes and buys a stake, 10%, 20%, whatever, of a fintech, and then says, we've got a partnership. And the challenge is actually extracting whatever that fintech is good at across the rest of the organization. Again, just throw out the example of, say, BBVA in Spain or ING in the Netherlands, really smart, senior management, completely get the digital agenda, yet they've struggled to basically demonstrate vis-a-vis their peer group that they have a real edge. Because what's happened is that sometimes these partnerships don't work because the fintech just gets swamped by the big company. Other times the partnerships, it moves a needle, but a small product gets moved. The rest of the organization doesn't get moved with it. So it's still really hard to demonstrate tangible kind of ROI, bottom line success. It's easier, almost the other way around. So in the US, for example, fintechs partner with banks because, you know, in fact, pretty much every or most fintechs, massive generalization, they don't have a banking license in the US, right? So you go and partner with, you know, ABC Bank that has a banking license in wherever it is. Actually, that works really well because the banks at the back end, basically as a licensing, as a sort of regulatory licensing vehicle, and then you've got the fintech at the front end. So it's almost like the fintechs have done that better because they've been able to lever, you know, I think it's about the outcome and the impact because existing banks have so many other challenges right now, whether it's low interest rates, no growth, now COVID-19, they really struggle to demonstrate a bottom line benefit from these partnerships. That's why I think these digital banks will be super interesting in Asia to see if anything, like if a Stanchart can actually future-proof themselves, because in itself, I mean, Denise is a great guy, you know, Mox is going to do fine, I'm sure, but in itself, Mox won't move the needle. But
Sure.
in 3 years' time or 5 years' time, what will we learn from Mox? So those kind of things. Maybe it's still too early. Maybe it's still too early to make it definitive whether these partnerships work for big banks or not. Is that a cop out? It's probably a cop out answer.
No, I think it is. I think it's if nobody was doing anything, you would presume people weren't taking it seriously. But actually, across the board, I mean, Alison, you know, like I say, you guys are a relatively new organization in comparison to HSBC or Citi, but actually the fact that you are born into this, it's like cloud, right? A fintech player is born into cloud. An organization like your own, Alison, is born into, well, partnerships are just the way I do this stuff, you know, like we believe in this way of working, which is why I come back to so much about partnerships. Is this predominantly a cultural thing rather than it being a technologically driven point?
Yeah, we're certainly coming from the mindset of not having any expectation of being able to achieve our business aims without partnerships, which I think is a real difference to the incumbents. I used to work at Barclays, and you know, there was definitely an idea of well, of course we can do everything ourselves, and I think that has changed. Certainly they've been doing quite a lot to foster fintech growth and their own digitization, but there is a real cultural difference where you are in a bank that has a certain heritage to it, and there's some pride in that heritage, and there's also a lot of people who have been doing things in a certain way for a long time, and change can be scary for people. But if you're in a young organization that is coming from a complete 180 mindset of we have to have partnerships in order to achieve our goals, then that's top of your agenda, is to not only get those partnerships, but make sure that they're really successful partnerships. And I think it makes a difference as well, given that we're a relatively small bank. So we're on a far more equal footing with the kind of partnerships that we're moving into. I think when you look at the large incumbents and the tech companies, like Rhonit was mentioning earlier, you've had it swing the other way around, where those large incumbents are used to being top dog and controlling a partnership, and therefore it not being a marriage of equals. And now they're having to look at it from a different perspective, where suddenly they're chasing that partnership because their relative bargaining power is diminished as against what they would normally expect to see. So it's a really interesting power play and power dichotomy.
Well, definitely that power is shifting, isn't it? And it's an interesting balance between, like say, heritage and confidence from a big brand and arrogance that actually you can do everything and build everything yourselves. You know, I've sat in many a meeting, Germain, I'm sure you have as from Fidor's perspective, where you've sat with a group of technologists in a bank and go, they're like, yeah, I reckon we could do that. We could build that ourselves. And I'm like, there's no way in the world you can build this yourselves. Like, not in 10,000 years could you achieve building this thing that this
And by the time
20-person
you've
startup
built
has done.
it's already redundant, because that fintech who could have built it for you has already moved on to the next version.
I think that's a really interesting point. I think if anything, look, we've learned a lot about gigantic technology companies working with big banks. I think we've worked a lot on what makes this successful. I think we've learned a lot about personal relationships that we can probably take into our personal lives as well, which is kind of weird. I wasn't expecting us to go in that route, but so thank you very much, panelists, for having this conversation. I think what we're going to do at this stage is ask if there's any other questions, because obviously you guys in the audience have been listening to this. Do you think it's a cultural thing? Do you think it's a technology thing? Do you think this is the big incumbents really trying to evolve their offering? Let's throw to Q&A and find out what you guys think.